Have you ever dreamed of having a tool, a trading tool, whereby you did not have to look at a chart, whereby you did not have to scan video after video of a market person or a podcaster or even, God forbid, CNBC? A tool that would give you an objective, unbiased, consistent view of any market, a market of your choosing, on an interval of your choosing. And to do so without looking at a chart. This is Swing Machine Plus. I am Bagadon at StockMarketCaddy.com, and today is January 28th at 10 a.m. And in a few short minutes, I'm going to give you a view of how our annual members who have this tool, as well as many others on their desktop, can utilize. Our monthly members get to see this tool, as well as other tools, algos, in a video every night from Sunday through Thursday. Today, I want to show you how we can plug in the biggest, deepest, most important market in the world, the SPY, S-P-Y. It's the S&P 500, and it's an exchange-traded fund, an ETF, but it represents the S&P 500. Now I'm going to change the interval to a weekly view. Why? The weekly view is how we make a determination whether a market is bullish or bearish. It's very important. If a market is bullish, a rising tide will raise most boats. Everything will have a tendency to float up. However, if a market is bearish, a lowering tide will have a tendency to lower all boats, regardless of what you might own. In a bullish market, you do in fact want to be buying the dips. Markets will go up, they'll pull back, you buy, they go up, they pull back, you buy. In a bearish market, the markets are going down, and then they rally, called rips, or what the professionals call fish hooks. Those rallies are not meant to be bought by the investor or the retail trader. For the aggressive traders, yes, they might buy them, but they're quick to sell them. When you're in a downtrend, the rips are an opportunity to sell. So we buy dips when the markets are in bull mode, and when they're in bearish mode, we're more inclined to sell the rips. So the S&P, the SPY, is in a rip, but it's been in a bearish trend for 40 weeks, starting on April 29th of last year. Now, yes, the trend is trying to change, but it hasn't yet. And this tool tells us where the middle of the fairway is. The weekly fair price for the S&P right now is 389 or 38.90 on the S&P cash. That is the fair price. We're above that, pushing toward euphoria. We may get there, we may not. As a trader, as an investor, I would rather buy when something is being panic sold. Warren Buffett, none other, has the old expression, when they're crying, you want to be buying. And when they're yelling, you want to be selling, as a reminder. Now let me show you another way that we can tell whether or not the market is yelling or crying. And we're going to plug in something called the VIX. And we're going to put the VIX on the same time frame, the weekly. You might think of this as the fair gauge, and it is in fact an inverse. And what may strike you as odd, and it does us too, on a weekly basis, the VIX has been short. And we just mentioned it's an inverse indicator. So for the last 40 weeks, the market has been trending down. Yet the VIX has also been trending down for 128 weeks. So this pullback, this bearish phase in the S&P has been rather muted. You may not have even noticed it other than in your statement. But let's look at where the VIX is on a weekly basis. It's what we call down here toward panic. It's very, very complacent. To be perfectly balanced with the S&P at 70, the VIX should be right here. So our interpretation is on a weekly basis, that the market is just a little ahead of itself. They're a little overly complacent. When the market, or if the VIX should get into a panic zone, the likelihood is that the market would move into euphoria, where everyone will be yelling. And when they're all yelling, we're going to be what? Selling. There's another expression. When the VIX is low, you go. When the VIX is high, you buy. Because you see, if the VIX was ever, and it would take quite a leap for the VIX to get into euphoria on a weekly basis, so it would take at least a couple of weeks, and it doesn't move, as you can see, that sometimes that fast. It can, but for the last 128 weeks, and there's reasons for this, it hasn't. But when the VIX is in euphoria, the likelihood is that the market would be very low or in panic. So these two help us gauge where we are. And yes, we can see that the market is above its midline and pushing higher. But there does seem to be some divergence here. We do seem to pick up on that the market is a little too complacent. Now, it could push higher. It could. But we don't think so. And I want to plug in yet another tool that we can use. This is just on the S&P. And it's called the skew. And, oops, put in the wrong symbol. $SKEW, skew.x. You can read up on this. And we're going to place this skew. We'll just put it on a weekly basis. The skew, it really won't matter what interval, but we'll just be consistent here. The skew also tells us what the professional trading class are doing in the option market. Normally, when the market is pushing higher, we would normally see the skew going this way, meaning that they are participating, the big professional money, and they are buying calls. When we see the skew, and it is at a relatively low number, but it has increased from 117, and when we see the skew pushing this way, it tells us that the professional money, they are getting more defensive as the market goes higher. So simply put, folks, on a weekly basis, our interpretation is, courtesy of Swing Machine, the market is in a bearish mode. It has bounced. It has been significant, but the market is overly complacent, and the skew is hinting that we are likely to have, in the next few weeks, if not sooner, a pullback at minimum in the market. I wish everyone the best. You're welcome to visit our website at stockmarketcaddy.com. You're welcome to call me any morning or any Saturday morning, but any day from 9 a.m. to 9 p.m., including weekends, and I'm happy to answer your questions. I wish you the best. We are not a broker. We are not a financial advisor. We are not making any claims. We are a mentoring site for those folks who want to move their trading from the realm of haphazard discretionary trading to a more mechanical, robotic approach. Good luck.